So wonderful good morning from Bangkok. You can see it a little bit in my back now this side. Here in Bangkok, it's now 5:45 here in the morning, and I'm really glad to welcome you here from this place far away from USA and of course from my home in Germany also. So I'm a German guy, so I hope you will understand my English. I do my best that you can understand everything. And my topic today, first of all, I want to say thank you to David and Anka that they having me here as a president, as a speaker on this wonderful event here. And I'm just one of the other speakers. And you heard a lot of interesting topic today in many speeches and many presentations. And hopefully you have learned something for yourself. So my topic may be or might be a little bit different because I talk about logic in trading. So the topic you can see in the slide, actually, it's logical trend trading. It's a simple alternative to Elliott and Fibonacci. Of course, I use Fibonacci too. And one of my teachers is an Elliott wave trader. And actually, he was here with me for 1 week in Bangkok also. And basically, he's placed in Japan, in Tokyo. And we have one funny joke when we check the charts. We have different looks at the views at the charts. And when he showed me his Elliott waves, I always say, my teacher, if I want to see waves, I go to the beach. So I see the trend and I work with logic. So what does it mean when we talk about logic? And by the way, guys, if you have any questions, I can see the chat here directly in front of me. And if you have any questions, so feel free to ask whatever you want. The biggest secret in trading, in my opinion, is there is no secret. I do this job now for 26 years. And yeah, I love trading because it's a challenge for my own personality, for my brain. And you never will hear me talking about psychology, trading psychology, or trading mindset, because I believe in the karmic principle of cause and effect. And before we talk about psychology or mindset, we need to talk about what's the cause. And the cause is what happens in your physical brain. So therefore, my unique teaching style is we do logical trading in combination of an understanding the neuroscience. So this is a special topic, but this is not the topic for today. Today is a little bit Fibonacci in the main view, and actually my spot and my approach of logical trading. So, and a big part of my speech today, of my presentation today, is not only slides. We want to go directly into the chart, and I want to show how I draw the trend and how do I figure out my entries and, of course, my exits. But first of all, I want that you a little bit have a clue what means logical trading. And logical trading means we need to understand, where does logic come from? Where does the term logic come from? It's from the old ancient Greek language, or what means it's a kind of, it's the original word of logic is logos. And logos means art of thinking or procedure, or generally refers to reasoning, and in particular to its doctrine of reasoning, of the reasoning thinking. Thinking with reason, reasonable thinking. This is what we talk about. So human or divine reason, comprehensive sense, world reason. And you see, there's no connection to any kind of emotions. We just really think about reasonable thinking. So where does this take place in your brain? Not your mind. Please forget mind, forget all this bullshit, sorry, of this useless topic of psychology. It happens in your physical brain behind your forehead, which is your so-called prefrontal cortex. So there is your logical thinking. It's a small part behind your forehead. And there you have to answer always the same questions. We come back to this topic. So logic comes from the term logos, which means reasonable thinking and forwarding reasonable acting. So as we know, 90% of all traders around the world, doesn't matter where you are, lose money. So actually, I had once my second seminar here in Bangkok. So the German guy was talking to 30 Thai people. And believe me, even the culture here in Thailand is really different to Germany or to USA. But when it comes to trading, it's exactly the same. Yeah. The people are greedy, the people are trading with emotions, but no one is talking about logic. So, and we need to ask ourselves why we act emotionally in trading, why it happens that often that we don't trade with a reasonable approach, why we act very often emotionally, especially when it comes to losses, so that we understand why we talk about logic. And I want to explain where this ends. So this is a sentence I created for my students. Emotions should never influence your trading. So, but it does. And this is the problem. It should never influence your trading, but it does. And we need to figure out how we can handle this, how we can avoid to act with emotions, because emotions are the worst trader ever. And I'm quite sure you know that about your own trading. So we always have the same view at the chart. Now, in every webinar and every seminar, especially even when I was here, so now you see it's going to, no, we don't see any sun this morning. So interesting part here in Thailand, we have nothing like some seasons. There's always just only one season. Becomes the sun goes up, sunrise between 6 and 7 in the morning, and we have sunset between 6 and 7 in the evening. So it's 12 hours, 12 hours, 12 hours day, 12 hours night. This is really interesting, and you get used to that. So you see now it's a little bit more bright outside there. So I always show the chart, and actually you see now this chart, and I tend to say to ask you, what do you think? And now you see this chart, guys, and thanks for still being here. What do you think? Please type in the chat right now. What do you think? Is the price going up or down? What do you think? Should we go long or short? If you have a look at this chart right now, and you are at the right edge of the chart, where you have to make a decision. So what would you say? Would you go long or would you go short? Please type in the chat box if you're still here, guys. So what do you think? It's going up or down? Or maybe you say, no, I do nothing because maybe I stay flat. So what do you think? Short, long, flat? What do you think? What is your view at the chart with your experience? So we see, as you see in the chat, which is really interesting and which proves what I'm talking about. Conrad says retracing. Kenneth says short. Yeah, Martin says can tell without in time frame. So uptrend with retrace. So you see, at least we have three different answers, but it's the same chart. So as you see, everyone has a different view at the chart. So, and especially when it comes to Martin's answer, can't tell without the time frame, then this is the biggest illusion ever. Because time, ladies and gentlemen, does not exist. Basically, Albert Einstein proved it, time and space are relative. So, and I prove you today, time does not exist. So you have to ask the answer, where does time frame come from? Where does a time frame come from? Because time does not exist in trading. So, and this is one of the worst illusions ever, that you think a time frame gives you any hint to become a better trader. So, and this you should keep in mind, and this is just a very deep topic. So the question is always, we need to ask ourselves, am I an investor? I'm a trader. Because if I'm an investor, then I'm not a trader. If I'm an investor, I invest in a stock, I invest in gold, I invest in something, even I invest in my health. For example, I go to the gym, I change my food, whatever there is. So investing is not trading. Investing means, Sawadee investing means you have a really long-term perspective. So you don't care what happens right now. You think, okay, in a long term, I got a big invest back. But as a trader, you need to understand that in trading, something different happens. In trading, you don't care about the long term. You want to make money every day. You may not make money every week, every month, every year. This is different to investing. So in trading, we need to understand what we trade, which means we talk a product and we do trading, which means we have two sides. We have two people. So we have two sides, which a product, it's changing the owner from one owner to the next. If you trade a share, yeah, then you have two people. One owner has the share, you want it. So if you want to buy something, you need a seller. And if you want to sell something, then you need a buyer. Without one of the two sides, you can do nothing in trading. So very often we forget this because I would say, we fall in love with the charts, but the chart is not the reality. The chart is an illusion. What happens, the chart, and maybe this is a very important sentence for you, the chart is the visible legacy from the numbers of the order book, no more, no less. But very often we fall in love with the chart and forget where does the chart come from. And therefore, we need basically to understand that trading, not investing, trading, which you do every day, is a zero-sum game. Because in trading, you have a product, whatever it is. It could be a share, it could be Forex, it could be crypto, it could be commodity, it could be a bond, whatever there is, there's always a product. So, and if you want to buy the product, you need a seller. So if I have the stock right now, for example, I have a Tesla share and I want to sell it, and then I need a buyer. And at the moment I sold it, I don't have something. The other one has it. So it's a zero-sum game. And basically, if we are really honest to each other, it's a minus game because you have the costs from the broker. Some fees or swap costs or whatever there is, a margin also. So, but we need to understand in trading, you do trading the product. Is it? No, it's not. You don't trade the product. It's just a name. The name is replaceable. Yeah, it's a stock. Tesla, Apple, whatever there is. It could be a euro dollar. It could be gold. It could be oil. It could be a 10-year bond, whatever there is. But you don't trade the product. It's just the name. It's replaceable, which means you trade what? Yeah, exactly. You trade the price. So, and when it comes to the price, even you go to any stupid store, you ask for the price. How much is it? How much is it? So when we come to the price, we just ask how much is it? There are no emotions. We talk about logic. So, and then the only job means trading at the end is mathematic, which means it's always the price. And the price has, ladies and gentlemen, has no emotions. We talk about the price in trading. It doesn't matter. And when we come back to Martin, he said, I can tell without time frame. Now you see the biggest illusions because the price does not know about any time frame. So where does the time frame come from? Yeah, it's come from you. The time frame comes from you because there is no time in trading. Here the market opens 8:30, 9:30, and closes 5:30. Done. In between, there is no time. It's just the price, and the price is made by volume between buyers and sellers. And after 26 years, I do this job now for 26 years. I didn't show you my Vita because I'm not the interesting person here. You are the interesting person. You are the VIP person, not me. I just share my knowledge. I just share my experience of 26 years right now. And I'm in this business very, very long time. And I lost everything with trading. I lost my money. I lost my confidence. I lost my family. Even my family left me years, by the way, years ago, because I lost everything. And by the way, I was very close to lose my life. So I understand at the end, thanks God to my mentors, they saved my life. Trading is just mathematics. It's just a zero-sum game because everything is about the price. And we only have one question to the price: how much is it? So we need this to understand. I'm quite sure you heard this very often, but very often we forget it. When we look at the chart, we look at indicators. You heard many things about Fibonacci, Elliott waves today. We had, I guess, 10 speeches. I'm the number 10, right? 9, 10, something like this, speeches today and presentations today. And I'm quite sure you heard a lot about indicators, but that's all not real. Let's just listen. What is an indicator? It's just an indication. An indication for what? An indication for what? Even Fibonacci, it's an indicator. Moving average price, Elliott waves. Elliott waves, guys, even my teacher tell this all the time. Elliott wave is not a strategy. Elliott waves is not a strategy. Elliott wave is just a specific view at the chart. But Elliott waves does not say anything about an entry or an exit. For that, you need other rules. So even my mentor, and he learned his business also in USA, by the way, but one of the famous Elliott wave traders over there, many years ago, 30 years ago. So, but an indicator is just an indication. An indication for what? So what's the cause? When we talk about an indicator is the effect. It's not the cause. An indicator is an indication. It's an effect of the cause, and the cause is always the price. So which means every indicator is made by any kind of price, and the price in the order book is the absolute Big Bang cause. It's the Big Bang cause. So listen, when the price is going up, like look about gold, actually. Gold is going up, 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 up. What do you think? Where is any indicator? Where is the RSI? Where is the moving averages? Where are the Bollinger Bands? Yeah, where? Of course, up to the heaven. Why? Yeah, but the price is moving up. So every indicator is just a lagging indicator. It's just following something what happens first. And first happens the price caused by volume on both sides, on buyers and sellers. So, and this is what I want to bring you back to your mind, that you don't forget this if you just check the charts. So even you work with indicators, which is a really cool thing, but indicator is not the holy grail. It's like, I saw some speeches today, but if you don't have any rules for that, for using the indicator, where is my entry? Where is my exit? Then every kind of indicator, even Fibonacci, is useless. So you need rules for that, because the strategy in trading, the strategy is given in trading. So what's the strategy which is given in trading? Yeah, it's really simple. What's the job of a trader? Because trading is not analyzing. Trading is mathematics. And analyzing, ladies and gentlemen, analyzing is not mathematics. Analyzing is just guessing. Analyzing is just explanation, actually what I see at the right edge of the chart. This is analyzing. This is just, yeah, what happens in the past. Yeah, analyzing the chart is just what happens in the past. So, and not what happens in the future, because we don't know what happens in the future, especially when it comes to trading. We don't know what's in the future. So analyzing is not mathematics. So, and therefore we need to understand, ladies and gentlemen, that actually everything what happens in trading ends, begins. in the order book. Think about it. It's kind of really simple. If you open your chart and you want to do something on the right edge of the chart, and you open your order mask, yeah, what do you type in? Your idea, your indicator. What do you type in this order mask? Simple, right? You type in the price where you want to go in, where you want to open your chart, and maybe you type in the price where you want to go out for your stop loss and maybe for your target. So what do you type in? Listen to the word. You type in the price, not your idea, not what you think about the chart. No one cares about what do you think about the chart. No one cares because it's not interesting. Because trading is, I say, a lifeless procedure. It's just the price, as you can see here in the slide, it's just numbers. So what's the second number? What's the second thing you type in your order mask before you send it? How much? How many? Yeah, how many, which means the volume. How many lots? How many shares? How many whatever. Yeah, you type in. So which means you type in just only two numbers, the price and the volume. And this is the absolute cause. So, and then if the moment you push the enter button, what happens? Yeah, this order goes to your broker. So, and if you trade a real share or the real market, then the broker is just a connection between you and the exchange, which means the broker sends with the costs the order to the exchange, and there is another order book. So, and then the job of the order book is to keep in balance buyers and sellers and make a new price by the highest volume. That's all. So when we talk about trading, ladies and gentlemen, we don't talk about Elliott. We don't talk about Fibonacci. We talk about the stupid price. That's all. And this we should really keep in mind. So therefore, when it comes to the time frame, you see here exactly in a slide, on the left side, there is the order book. On the right side, there is a time and sales list. So the order book, because people very often say, yeah, the order book is manipulated. Yeah, it is, of course. But this is not the worst thing, because even you manipulate the order book. How? Yeah, so maybe you see something in the chart, for example, yeah, and then you type in your order and you send it to the broker. Yeah, then your order is literally in the order book. And 1 minute later said, oh, damn it, it's not my idea anymore. Then you delete your trade, right? You delete your order. You remove it from the order book. So what happens? Yeah, you manipulate in the order book. Yeah, of course, if you or me, if we do it, no one cares. Yeah, but it's the same. Because if you're huge traders from one of the banks here, for example, yeah, then you try to figure out where are my buyers and my sellers. So what are you doing? Yeah, you do some orders in the order book because people see it and then they trade with this. And when it comes to the price, you delete it. It's a tactic. Yeah, it's just a strategy, no more, no less. So, and this, ladies and gentlemen, we need really to understand what happens in trading, that the very, very beginning is always mathematic. And therefore, we talk about logic. Logic is mathematic. So whenever you look at the chart, forget what you see there because it does not exist. The beginning is always price and the volume. That's all. And when we see the right edge of the chart here right now, the right edge of the slide here right now, you can see it, the time and sales list. And why is there a time? Is this a time frame? No, it's not. It's just the time. Why? Because, yeah, the government says we need to know when did you make the purchase? When? When it comes back to the original trading, 1879, New York, Chicago, yeah, there was no time. There was just at the black board at the wall, where the young men were writing the numbers with the white calc at the board, just the price and the volume. There was no time. That was the beginning and the end done. So now we have computers. Now the government says we need to know when did you make a purchase, that we can investigate something, but there is no time frame. It's just a time stamp. Goes to the grocery, yeah, and you go to the checkout and you get your receipt, you get your slip. So what is it? Yeah, the product, the price, how many, and the time stamp that everybody can analyze when something happened. But there is no time frame. So where does the time frame come from? Yeah, God's sake, from you, not from the market, not from the order book. The time frame comes from you, because you as a trader, you are the only one who says to your software, MetaTrader, TradingView, whatever you use outside there, you say to your software, 1 minute chart, 5 minute chart, hourly chart. You are the only one. The next trader around the corner, check the same chart, says 5 minute. So who cares? So don't forget this if you think time frame is important, or this really useless thing of multi-time frame analysis, the worst and most stupid thing ever. Because we talk about real traders, not the guys with the Lamborghini in Abu Dhabi or Dubai. We just talk you and me, we are real traders. So, and the real serious traders, the famous trader, the really successful trader, they have their own time frame. They don't mix it. So as a daily chart trader, I don't care about 5 minute. Why should I care about 5 minute chart? I have a look at my daily chart. There my signals come up. So, and if I trade 5 minute chart, why should I trade about the daily chart? I can tell you the reason why we do this. It's a human part. It's a neuroscience, because the only thing what we are doing in trading is we are looking in God's sake, we are looking for safety. We all want to have comfortable feeling. And we might think, let's have a look at the daily chart. Oh, when a daily chart is going long, maybe I should trade the correction. Maybe I should trade in the same direction. Oh, if I look at the hourly chart, the hourly chart is going short. What should I do right now? So, oh my God, the daily chart is going up, the hourly chart is going down. I want to trade in 5 minute chart. Oh my God, what should I do right now? So you see, there is the point we're getting down to the limbic system, which means the place where this is the spot in your brain where your emotions are placed. So, and not longer the logic, because now you're getting confused. So, and this is one of the worst things ever. And this is why I want to talk to you about logic and mathematics. So how does a trader earn money? What would you think? How does a trader earn money? Only one strategy, ladies and gentlemen. Only one. What is it? Same. Since the beginning of every kind of trading, buy cheap, sell expensive. Price, exactly, Conrad. Thank you very much for listening. Exactly the price. But how does a trader make money with the price? Only with one strategy. Buy low, sell high, vice versa. If I go now down to the street, here it's now almost 6:30 here. Then the first guys and people standing at the street, they're selling fruits. They're selling chicken sticks. Actually, really, it's 6 a.m. in the morning. They sell chicken sticks here and real food, because in Thailand, it's really interesting. If you meet people, actually, normally in Germany or maybe in USA also, if you meet someone, you say, "Hi, how are you?" So in Thailand, no one cares. The people say, "Hi, have you eaten yet?" So they always care about if you're hungry or not. So you'll be really careful. So it's really interesting. 6 a.m. They're selling here the fruits and chicken sticks and rice and some and something like this. But it's exactly the same. How they make money. They sell. They are traders. Actually, they trade the fruits. They trade the chicken sticks. How they make it. Yeah, they bought it more cheap than they sell it. And the difference is their income. Yeah. That's exactly the same logic. buy cheap, sell expensive. It doesn't matter what it is. Yeah. It doesn't matter if you trade burger, pizza, or chicken sticks, or whatever, French fries, whatever there is. As a trader, the only way to make money is buy cheap, sell expensive. It doesn't matter. And this is what we very often forget when we do trading, that we just have a product, the product is a price, and my job is to sell high, to buy cheap and sell high, vice versa. So now, how? And this is the worst thing ever, that people are looking for strategies. No, guys, please forget. As of today, please forget it, because you don't need the strategy, because the strategy in trading is already given. It's buy cheap and sell expensive, vice versa. So, and now the next logic step is, when it comes to the trade, when it comes to the right edge of the chart, the question is, can you influence the price? Yes or no? Can you, as a private trader, are you able to influence the price? Can you personally, as a trader, can you make it happen that the price is going up? Can you make it happen personally? Are you responsible that after you did your trade, the price is going up or down? No, you cannot. Yeah, maybe a central bank is able. They can influence the price because you need enough volume to influence the price. So the only thing is, you can pray to the Holy Lord, please let it go up or let it go down. Or the better solution is, you have rules for that. Rules. Why are the rules so important? Because the question is, where is your mathematical edge? Where is your mathematical edge? So the question is, when it comes to the right edge of the chart, it doesn't matter if you use Elliott, if you use Fibonacci, if you use any other indicators, or if you use my rules, I'll show you in a few minutes. Where is your mathematical edge? Because when you understand right now that you're on the right edge of the chart, you trade with the price, and your only job is to buy cheap and sell expensive, vice versa, is the next question: when is cheap cheap? And when it's really high? When it's the end? When should I go out? When should I go in? And for that, you need rules, not a strategy. The strategy is given. You need clear rules. Why is this important? 2 points. First point, you trade with probabilities, not with guarantees. Logic, guys, it's logic. When it comes to right edge of the chart, yeah, it's mathematics, the price, and you cannot influence the price, which means you can analyze, you can guessing, you can think about something, but no one cares what do you think. No one cares what kind of analysis do you do. No one cares. The order book is just numbers. So there is no row in the order book where you can type in your idea. I thought the price should go up because this one. Oh, I trade 5-minute chart. No one cares, ladies and gentlemen. So when it comes to probabilities, which means you don't have a guarantee that the price is going up and down, probabilities means you need a probability at the best way over 50%. Yeah, even with 51%, you can be successful in trading, but then you need a long time for this. So the higher the probability, and forget 90%, that's stupid. Yeah, you need a high risk for that. So, but higher than 50%, then you have a mathematical edge. Yeah. Perspective of psychology of trading, mass psychology is what marked this reflection of thus relevant. No, I don't think so. Trading, this is what I try to explain. Trading is price. Trading is mathematics. Yeah. The point is that the mass is looking at the chart, and they trade with emotions. They trade with their own opinions. Yeah. But no one cares about your opinion. Guys, this is what I really try to explain here. Forget this stupid thing of psychology, mass psychology. This is marketing. This is the people this is just advertisement for trading. Yeah, forget all the things. Really, forget it. By the way, see the note from David. Barry is back, and after I will hold the time, and then Barry comes back and finishes a presentation after me. So if you wanna, thanks God, he is back. Thanks God. Okay, so really, really important. Forget this, what you hear on YouTube, on TikTok, on Facebook, forget this. At the end, the red actually, it's just you and the chart, you and the price. So my question is, forget the strategy. The strategy is given already. Buy cheap, sell expensive, vice versa. There is no psychology. That's still logic and math. So my question to you is now today, where are your rules? Where are your rules? Not strategy. Where are your rules? Where is your mathematical edge in trading? So when we talk about rules, we talk about 5 magic questions. The right edge of the chart, which is important for your prefrontal cortex. 5 magic questions. What to do, how, when, where, and why. Can you repeat it? I repeat it for you. What to do, how, when, where, and why. Let it repeat it the next time. What to do, what, how, when, where, and why. Yeah. No, Raj, this is not correct. No. Let me fix this for you. I never say indicators are irrelevant. Of course not. The point is what our indicators do, what they do. Indication, it's just an indication. What you see, you have to answer the question cause and effect. Very important. And what's the cause? What comes first? The price or the indicator? So my question for you, type in the chat box right now. It's a simple answer, a simple question. What comes first? The price or the indicator? What comes first? It's always exactly, thank you. It's always the price. So what in a logical way? So what does the indicator say? Yeah, the same like the price says, but the price is the same. So an indicator is just an indication what is right now. What is right now? That's the indication. But it's nothing, it says nothing about the future. It's just an indication for something what happens right now. And the last thing I saw from Barry in his presentation, he was talking about the momentum. That was the last thing I saw from him. Yeah, when the price is going up and the momentum indicator is going down. So what is the momentum indicator? Momentum, Barry, thank you, you are back. So the momentum indicator is just something which is based on the volume, which is also just a number. So when Barry talks about the indicator of momentum, then it's nothing else, just an indication, what you even see in the chart without any indicator. It's just an indication. But even when Barry will finish his slide, he will talk to you the same exactly. Even you use this, you need clear rules. You need rules for that, where you want to go in and where you want to go out. And no indicator will give you this answer. You need clear rules for that. So the rules are based on 5 magic questions. What to do, how, when, where, and why. And why is this so important about your prefrontal cortex, about logical thinking? Because this is what your brain, what your prefrontal cortex asks you millions of times every day. What should I do? How, when, where, and why. So this is very interesting. And this is now neuroscience, and then we go to the chart, to my rules. This is just neuroscience, because when you cannot answer one of those 5 logical questions, what to do, how, when, where, and why, you must act emotionally. Because when your logical thinking is not able to answer one of those 5 questions, it must act with emotions, because then you are confused. And confusing is the cause of emotions. So whenever you're on the right edge of the chart and you don't know what to do, how, when, where, and why, you must act with emotions. And emotions is the worst trader ever. So when it comes to risk management, when it comes to when, you need clear rules. The right edge of the chart. If you don't have any rules, they show you what to do, how, when, and why, where, and why. You must act with emotions, and then you're done. This is one of the reasons why you lose money. So the question is always, where is your mathematic edge? It doesn't matter if you use indicators or not. If you use momentum indicator, trend following indicator, whatever, they're all lagging. They're just indication of something you see about the price. The price is the big bang cause of every kind of trading. Yeah. So my wife is always asking when, where, why, how, very emotional. Yeah. The best perfect example when it comes to these 5 questions. Why we do have arguing with our wives. Yeah, so but I don't have one, but maybe you have one still, thanks God, maybe. So why you have fightings with friends, with your family, with your wife? Why? Only one answer. Because we tend to, we say, I don't understand. I don't understand. But this is not a psychology topic. This is something what happens in your prefrontal cortex because you cannot answer the questions. And then you have to act in an emotional way. This is not psychology, it's neuroscience. What happens in the biochemistry in your brain. So where is your mathematical edge? So, and there you can use Fibonacci, indicator, momentum, whatever there is. So Fibonacci, and this is true. I'm a pure trend follower, many, many years. My mentors also, pure trend followers. And my Dow family is one of the successors of the turtle traders. The turtle traders were the most famous, beside of Charles Dow and Richard Donchian, for example, the most famous trend followers ever. Why? Because Richard Dennis, and Bill Eckert understood that the price is moving. More volume up, more volume down, more volume up, more volume down. At the end, you have move, correction. At the end, you have a stupid trend. That's all. And all my previous presenters today and speakers today, and even Barry, I saw him talking about, yep, this is the trend. So what is the trend? It's just price moves based on volume. More buyer volume, price going up. More seller volume, price going down. Buyers buy cheap back and the price is going up again. So at the end, you have a trend. So, and trend following is the most successful trading approach ever. Many studies prove that. That trend following is the most successful approach ever. Buy cheap, sell expensive. So the hit quote, the probability is anywhere, depends a little bit of the maturity of the trend, how old is the trend, between 64 and 72%. So, but now the question is, when I want to buy cheap in the correction, not in the move, in the correction, I need to answer my 5 questions: what to do, how, when, where, and why. And exactly for that, you need rules. So in the rules, this is just another, you see the numbers, the maturity of the trend on the left side, second trend arm, third, fourth, 5, and so on, so on. You see the probability is always way over 50%, over 50%. And the right says, okay, when you go in, then sometimes you have really high probability. This is just pure trend following. It's not rocket science. So, and here comes the rules. Here come the rules without an S. Here come the rules. So rule number 1, a valid trend is needed. Rule number 2, best entry is in trend arm number 2. I will show you in this chart right now. Rule number 3, the correction has to be more than 38%. And for that, I use Fibonacci. I will show you how. And rule number 4, when something happens, wait for the rebound. And you see my slides right in my chart right now, I work with Heikin-Ashi. We got it simple. I don't need any candlestick patterns. Yeah, I just trade with Heikin-Ashi. Because Heikin-Ashi is simple. You just have 2 candles, a trend candle and a balance candle. And the trend candle says, okay, I have maximum volume on one side. It's the trend candle green. In this time frame, I have chosen, by the way, to find my signals. Not about the time frame is important. There is no important time frame. There's just a time frame I've chosen that I find my signals, because you should not miss signals. Mathematical edge, other topic, not for today. So, and I use Heikin-Ashi because if I say, okay, 1 hour, then I just say to my software, please show me what happens about the price in 1 hour. And the software gives me a candle. And the candle has just only one meaning. Okay, it's a green one. Then I have in this 1 hour, 100% more buyers than sellers. And is the candle red? Then in this hour, I have 100% more sellers than buyers. So if you use 4-hourly chart, that's a different meaning, because in 4 hours happens way more, 4 times more than in 1 hour. So why you should make multi-time frame analysis is stupid. It's unlogical. It's illogical. So Heikin-Ashi balance candle. This is for my why. So my when. When the balance candle shows up, then maybe the correction is coming to an end, and this is my signal. So, and that's the 4 magic rules for trend following in modern age of trading. And the interesting part is, if you have such rules, the right edge of the chart, what can you answer? What can you answer? Exactly. The 5 magic questions. What to do, how, when, where, and why. Simple, right? And if you can answer those questions, no feelings needed. No feelings needed. Why? Yeah, you have the rules. Just do it. Then calculate your money management and everything is fine. The rest is happening in your brain. Handle my losses, handle my money management, accepting the inevitable thing of time, that you cannot become rich tomorrow and not next year. It needs time. I tell my students all the time, you need around about 2 years. 2 years, not to learn the strategy, not to learn the rules. You can learn the rules with YouTube, but to handle yourself when it comes to losses, when it comes to a drawdown phase, when it comes to this one, to this one. So, and what's the next slide? No. So now let's go a little bit to the chart. I guess I've run about 5-10 minutes roundabout. So this is the chart. So if I want to know what should I do at the right edge of the chart, I need to know rule number 1. A valid trend is needed. So what is a valid trend? So now we are the right edge of the chart. So actually, I'm looking to see the trend. I'm looking for the first time, I look at the highest price or maybe the lowest price. Yeah. So, okay, let's go to the lowest price here right now, that I can show you how to draw the trend. So I go really deep in that I can see everything what happens here. So you see it's Heikin-Ashi. This is a trend candle, and the trend candle is really well described. A trend candle has only one shadow, one body and one shadow. So in this case, it's red, one body and one shadow on the lower side, which means in this hour, this is hourly chart right now, in this hour, we had 100% more volume on the seller side than on the buyer side. So it's a green one. Then we have 100% more buyers, volume on the buyer side than on the seller side. So, and the moment you have 2 shadows, and the upper and the lower side, then you know that's why we call it balance candle. Because in this hour, there was no volume 100% on one or the other side. The price keeps in balance. We have same or kind of same volume on buyers and sellers. That's why we call balance candle. The price is in balance and has no 100% overloading on one or the other side. So actually, yeah, no, it's not the doji. No. We have this kind of same candle, but don't mix it. Use the term balance candle. What is a doji? What is a doji? Describe it. What's a doji? So balance candle, yeah, it's just for your brain, very important. The price is imbalanced. Doji is a Japanese word. So hanging man, bullish engulfing, bearish engulfing, all these stupid things, forget it. Okay, now we start always the trade or the trend starts always at the highest or lowest price. And the lowest price was here at the top, at the low, at the bottom of this candle. Because why? Exactly in this hour, at the end of this hour, that lowest price was the lowest price in the order book. At this price, the sellers were not longer willing to sell cheaper, and the buyers had more volume and the price was going up. That's the job of the order book. So we start there at the lowest price, yeah? And now you see two balanced candles in a row. Shows me, the correction starts. The correction of this down move starts. And now I try to find the next change of color. And this is really simple in Heikin Ashi. When the color of the candle change, then you know the volume changes. So that's really all. So, and now I do, where is it? Here. So I start here, the lowest price. I go there to the highest price, and you see there was no higher price anymore. So the correction starts, and then I go to the next top, and then you see this is my first valid trend. So a valid trend is really well described. I need one move, one correction, and a second move. And a second move must succeed, and must go higher than the last high. That's a valid trend. That's all. It's really simple. It's not that complicated. Yeah, a valid trend includes one move, one correction, and a second move. And with Heikin Ashi, it's way more simple to see it, because when the color changes, then you know, okay, the volume changes. That's all. You don't need any candlestick patterns for this. It's really, really simple. So, and then if you have the second move, which goes higher, by the way, secret, 3 closing prices. You need 3 closing prices above the last high. That's just a secret. Yeah, that you know, okay, the volume is really high to go up. That's just only a fake false breakout, something like that. Yeah, and then you see, and then you do your horizontal line, for example. You do your horizontal line there, then you know, you see the fake breakouts there. So, and then if you have the second high and you have the second correction, you see entry at the best, that is trend arm number 2, which is the second correction. One trend arm, ladies and gentlemen, is one move, one correction. One trend arm, like a real arm, yeah, or this biceps and the elbow. That's the second arm, one trend arm. Very simple. So, and then if you have the second high and you see the correction starts, then you use your Fibonacci tool. You start at the last correction point. You start at the last correction point and go up to the last high point. Then this is 0, and the last point, correction point, is 100%. That you see how deep does the price correct to the last move, regarding to the last up move, and vice versa on the short side, of course. Yeah. So at the top is 0, at the point, lowest point is 100%. So, and rule number 3 means the correction has to be more than 38%. Why? Cheap price. And in a common sense of the market, the cheap price starts at 38%. Statistic, mathematical edge. Million of times proven, by the way. So now you see the price was not correcting 38%, not here, but here with this candle, the price was correcting there, deeper than 38%. So in that moment, you know, now I have my valid trend. Rule number 1. Now I have my second trend arm. Now I have my correction deeper than 38%. And now just waiting for the rebound, waiting for the balance candle or maybe the next change of color. And this happens here. Yeah, that happens with this candle. So you see it's a balance candle. We have shadows on the upper and lower side. So now you know your entry. Now you know your entry. And now you can answer the 5 questions: what to do, how, when, where, and why. It's really that simple. So, and that means you have your entry, you have your entry price. Let's say this one, it doesn't matter. You have your entry price exactly there above that candle. You don't work with limit orders. You always work with stop buy, stop sell orders. So very simple. Where is now your stop loss? Your stop loss, same, at the last deepest point. The last deepest point, at this point where it's 100% correction, there is your stop loss. And by the way, stop loss does not protect your money. Stop loss protects your trading idea. Different. Your money is protected by the money management, not by the stop loss. Stop loss protects your trading idea. So now there is your entry, there is your stop loss, and that's all. That's literally all. Now you can answer the questions: what to do, how, when, where, and why. So, and then it comes to a kind of trade management. What are you doing? If you work with how should I say, if you work with stop loss, is not about for money management. It's not about for protecting your money. Stop loss should protect your trading idea. Forget the stupid things, of course, stop loss 1%. That's also illogical. Other topic, maybe for the next webinar series, maybe for the next event here with David. There's another topic. Or you come to my education, then you learn more about that. So now it comes to trading style. If you work with a risk-reward ratio, or if you work with trade following, for example, or if you trade with whatever, just movement. So now you can say, for example, okay, let's have, what should I say? Let's have this we can delete, sorry for this. So maybe you can say, okay, we can delete Fibonacci also right now. So maybe you can, okay, there is my entry. Yeah, there is my stop loss. Okay, let's say I take a risk reward ratio 1 and 1, for example, here. So then you know where is your target. Yeah, and your stop loss is there. Yeah, and your target is there. So done. That's all. So, and with this, very simple. You know your answer, you have your answer, where is my entry, where is my exit. So, and then the rest is money management. That's all. And now you can open a lot of charts. Yeah, and I just give you here one example. This is one of my signal services right now. Yeah, so you see there was my entry here. This is actually US dollar, Canadian dollar, 1 hourly chart. So you see there was my entry. This is from my signal service, which is, by the way, free. You will find it on my homepage. There is my entry. And you see, I was just following with the price. You see, there is my stop loss right now. Yeah, and this is my money I will get. So I don't know how far the price will go. I don't know. I'm just a trend follower. I let the market decide how much money I get with a single trade. I calculate my money management. Yeah. How come 100% return is stop loss? That not too deep. That also statistically the price could return. No, Raj, you see, that is what marketing tells you. The stop loss protects your trading idea. The stop loss had nothing to do with Fibonacci. The stop loss is always the latest, deepest point of a trend, because there the trend break. And if the trend breaks, there is no trend anymore. So my trading idea is done when the trend breaks. And that's all. So you see many, many examples. And for me, the most important part is that this is the simple thing ever. And you have to really keep it simple. So, and in the end, is this learnable? Of course. Yeah. What do you need? Willing to do it, discipline, persistence, and you need to invest. Invest your time in a real education, in time to learn this stuff, and forget that you become successful tomorrow. So in my opinion, just the success is in your hands. That's all. And it doesn't matter if you use Heikin-Ashi or if you use Fibonacci or whatever. Yeah. And Matt, you don't need a large account. The point is, if you have a small account, you are always in danger to use high risk, because I tend to say we need money management 0.5% of your account. Yeah. Because how is this calculated? Other topic. We need whole day to explain all this, because this 1%, 2% thing, well, risk management is also illogical. It's a stupid thing. It has something to do with mathematical edge. But I want to give Barry the time to finish his slides. If you need more about trend following, then come to the homepage, howtrading.com. I just want to give you a little bit hint, how is my trading approach with trend following, with neuroscience, and there are so many other topics. Thanks for listening, guys. Thank you very, very much to David and Anka that I could share my knowledge with you. Thank you very much for your time. Greetings here from Bangkok. And with this, coming back to David. Have a good day. And hey, let me finish this one. As always, have courage and be kind. And may the force of the logic be with you, because this, guys, this is the way. Back to David.